So hello, my name is Tin. I'm from the group IB13B, and this is my analysis of a financial statement. My chosen company is Fiskars Group. First of all is a preliminary analysis of the company. Fiskars Group was established in 1649 as a ironworks in a small village in Finland, but since then has grown to be one of the leading force internationally and locally in the business of consumer goods. Their products are available in more than 100 countries. There are three main operating segments, which are America, Europe, and Asia Pacific, and also other activities. There are four business regions, which is North America, Nordic countries, Europe, and Asia. They're active in three businesses, which are functional products, living products, and outdoor. Compared to other business regions, they have stronger position in Nordic countries and in North America. They employs around 9,000 people in 30 countries, and in 2015, the group recorded net sale is 1,105 million euros, which is very much better than the last year. This is the horizontal analysis of the group. As you can see, net sales increased compared to 2014, around 337.5 million euros, and equals to 44% of the net sales of 2014. However, that leads to an increase in cost of goods sold, which increased about 50% compared to 2014. The gross profit is 26% more than in 2014, but profit before taxes dropped around nearly 85% compared to the previous year, which led to a much lower profit for the period of 2015 compared to the period of 2014. Their total assets increased by 15%, equity also increased by 4%, and liability also increased by 41.34%. The vertical analysis of Fiskars Groups. In 2015, the profit for the period of 2015 is around 8% of the net sales, while in 2014, the profit for the period is 101%, which is higher than the total net sale. Total assets increase, of course, but in terms of non-current assets, it takes around 44% of the total assets, and current assets the other 54%. In terms of current assets, in 2014, the amount of current assets is so much higher and takes 70% of the total asset. Equity increase and takes around 65% of the total of equity and liabilities in 2015. Also, compared to 2014, both current liabilities and non-current liabilities increased. The key ratio analysis of Fiskars Group sees many ups and downs, since 2015 is not exactly a profitable year for the groups. Gross margin percentage is 37.8%. Operating margins is 4.2%. Return on investment is 2.53%, and return on capital employed is 7.25%. EBIT percentage, ROI and ROCE is not good at all compared to the previous year. Stock days 77.39 days, which is a little bit higher than the desired number. Current ratio and quick ratio is average, while working capital is quite efficient. The equity ratios and relative indebtedness show the strong positions of the company in terms of equities. From the analysis above, a few key points can be noted. First of all, 2015 is not profitable as it was for Fiskars Group in the previous year. This is mainly due to the fact that in 2014 the share from associate companies and the profit from associate companies of Fiskars is very high, which contribute to the 101% of profit for the period of 2014 compared to the total net sale. But in 2014 there must be a divestment, or maybe the company draw out the stake in the associate companies, so the amount is no longer available, which lead to a lower profit for the periods of 2015. Despite the financial setbacks in 2015, the group maintained a very strong amount of assets and decent working capital, which allow it to meet with its obligations such as payroll or paying the liabilities. Strong capital structure ratios, which show a strong commitment from the shareholders, and the strong liquidity positions. 2015 is not an efficient year for the group, showing through the stock days and creditor days and debtor days. However, it is still noticeable that even though 2015 is not a profitable year for Fiskars Group, it is safe to say that they still maintain a very, very strong positions in terms of finance and liquidity. And it is safe if investment, and it is also very safe to invest in the company thanks to its strong positions, the commitment of the shareholders, and its long and very successful history. So that's the end of my analysis. Thank you for listening.